Hey everyone, Charting Man Dan of ChartGuys.com here again with Chart Gal Lori with a new background going. How are you, Lori?
I'm doing great. These deer were harmed, but they were harmed for the good of food. My dad no longer hunts because we don't need the food to eat anymore, but they were, we used to hunt when I was little when it was actually needed.
All right. Well, let's talk about a lot of change. The election. We've got a lot of money is flowing around in a lot of places, and a lot of people are surprised. We have a narrative that the talking heads give us where if there's election uncertainty, we need to be watching for the market to drop. Everybody prepares for that to happen. Then we get it, and it's priced in, and the market doesn't do what a lot of people expect it to do. So that obviously makes it a somewhat difficult trading environment. The first question about the swing report is, as a general rule, what type of names are you looking for as far as what you're targeting to add to the swing report?
We are looking for the strongest of the herd. We are looking for the very strong names that cannot be easily picked off by the bears, i.e. the wolves. We are looking for the names that prevail in stronger market conditions or even weaker market conditions. So we are looking for those names closer to all-time highs. Actually, I get asked the most about what is your scan? How do you do the swing report scan? We are looking for names that are pretty close to their all-time high. Things that are in motion tend to stay in motion. Everybody loves a good oversold bounce, but oversold bounce typically tends to stay in motion to the downside. You get some great flips, but they're not things that you typically want to swing.
So that goes along with correlations and watching correlations and the names that are in the strongest positioning. That's what we obviously call a bullish correlation, where it's almost like the broader market will take multiple steps back and the individual name will only take one step back. And then every little upside that the market sees, it goes step for step with it.
Absolutely. This past weekend's name comes to mind, AMED. Amedisys is a home health company. And with healthcare, it was pretty much set up bullish for either when Biden or Trump. And then with COVID overlay and the strong demand for healthcare services and home health people to stay at home as much as possible and not spread it, AMED was just a natural pick for the swing report. It was definitely strong. And if the market were to get a pullback, not that it could withstand a pullback, but it should hold up better than other names.
So we obviously have a lot of macro news going on, whether it's the election or COVID, as you mentioned. How do these news events, when they happen or something hits the market, how does that impact the plays in the swing report?
Well, we are looking at the news every week as part of the intro and summary. We did an election special update the last few weeks, and we'll be morphing that into a post-election update, looking at regulations that are coming about and how it could affect macros. But overall, the technicals override the overall news, and the technicals are the market's efficient. It prices in that news before it even happens. So,
all right. So what are you going to do differently now that the election outcome, lack of outcome, we still don't know. We're getting a little bit of a lean. It's looking like Biden might pull it out. We don't know how much contesting there's going to be from the other side. So what are you doing differently now that we're at this stage?
The uncertainty and the gridlock actually is a good thing for the market. As we know, the market likes balance. The market likes homeostasis. I once had a trainer that told me I need to eat the same thing as much as possible every day. And it didn't really make sense. And she kept saying the body loves homeostasis. It likes for things to stay the same. And so does the market. It doesn't like for every variable to be flipped at once. So having the Senate remain Republican, if that does in fact stay, and Biden, if he's the president, and things are pretty much going to remain the same because it's going to be gridlocked and there won't be a lot of variables changed at once.
That makes sense.
And overall, at the swing report, we're focusing on technicals. Consistent technicals, they deliver us reproducible results. And we have to focus on those consistent technicals regardless of the noise around us.
What would you say, just out of curiosity, percentage-wise, what percentage factor is technicals versus fundamentals for you?
I would say 80 to 85% technicals and 15 to 20% fundamentals. We do not want to put names out there that are not having year-over-year earnings per share growth. I mean, there are so many names that are in growth, like LVGO was an amazing name for the swing report, Peloton, Pinterest, Zoom. Zoom was our biggest winner of the year. These are names that are putting out huge results, and we knew the COVID narrative, and we jumped on that narrative with Peloton and with Zoom pretty early on. So that had a fundamental spin, but the technicals support it. If the technicals don't support the fundamental narrative, we can't put it in the swing report. So, but the vice versa is true. If we don't understand the fundamentals, but the technicals are great, we can still put it in the swing report.
So I've been noticing, obviously, a lot of money moving around very quickly. Last week, it was a big exit with everything dropping significantly, people taking risk off as far as not wanting to be holding into the election, and then that money just poured right back in. Stocks are having a huge week. Cryptocurrency space is exploding. Marijuana sector is exploding. So the high risk sectors are showing us that there's a lot of risk tolerance right now. So how do we track these funds? How do we know where they're going?
Well, the swing report had the great benefit and the great disadvantage of launching during a pandemic. So we've really noted just cycles in general and how they relate to the pandemic cycle and how money flows. So the money flows in our quadrant of relative rotation graph, and it shows us 5 to 6 weeks in advance what's coming in favor. Now, we're not bottom picking. We knew in March that real estate and utilities were being thrown away. We weren't recommending AWK and NEE during that cycle, but we saw in August they were coming back into favor, and so then we made it one of our swing report picks. So we're not getting too far ahead of ourselves, but we do understand how cycles work, and again what the technicals and RRG shows us.
So pretty much not trying to nail the bottom, waiting to see that the big money is coming in after a bottom is hit, and then jumping onto that momentum.
Absolutely. The last couple of weeks, we've been discussing industrials in the swing report, actually a couple months, and infrastructure and Democrats or Biden, it's not too bullishly correlated. So industrials right now are on the downward slope of the cycle going clockwise to the weakening. So we may not be focusing on industrials for a few months, but we'll let the charts tell us.
All right. Well, that's all the questions I have for you today, Lori. I appreciate you stopping by.
All right. Thanks for having me.
Have a great day.